Hey everybody, this is Jose. We are about to get started. This is a sound check. It would be great if you could confirm with a quick message on the chat box that you hear me well. That would be a great confirmation for me to have so we know we can start on time. I believe all is good, but again, as always, waiting for your confirmation, my friends. I will turn on the video screen as well so I can position myself in the bottom right side of the corner. As always, this is my little place, little space here, and ready to begin. Okay, Christian, thank you so much for the message. It's options time indeed. Joanne, how are you? Wayne, how are you, my friend? Siderman, very good. So it seems that all is good. Everybody is reporting that we are ready to get started. So please go ahead and read the disclaimer carefully. This is important information before we get started. This is Options with Options, July 22nd, 2021. I am counting on you on reading the disclaimer completely as it is indeed important stuff. As we start our option session today, we are going to be looking at the market environment so we understand what's happening out there, so we know how to position ourselves better. From there, we'll look at trade review, meaning looking at the trades that we have closed, if any. We'll also look at open positions and therefore talk about trade management. And from there, move into trade execution. Okay, so this is the plan for the session, just reviewing that all is good everywhere in all the other streams, and it does look like all is good. Wonderful. Clive, how are you? Maka, how are you? Jeff, how are you? It is very good to see you all, my friends. Let's begin. Okay, let's begin. Here we go. I'm just going to close the introduction slide and jump into our trading platforms here. Okay. So, first of all, let's talk about the market. Okay, so this is the S&P. So what's happening with the S&P? Well, yesterday we talked about how very likely we were going to have a change of climate, and today, as we can see, we do have a change of climate. We are in candle number one in a climate that is supposed or suggested based on probabilities to last for 9 candles in a daily time frame, moving higher. So the market may start resuming the movement to the upside, potentially getting very close to the. Just had a problem here, and that was not expected. Okay, well, we'll continue the plan with the TradeStation. So I was going to say we are getting very close to the all-time high, which is right there. So if in that daily time frame the market continues going higher, so we're going to be in that situation where we start making all-time high again. And if we do make all-time high again, so again we are now in front of a potential opportunity. I'm just going to use specific stock symbol names since we were in those trades together, which in this case I refer to Lily, which are opportunities that were very enjoyable in the sense that when the market started making those all-time high, if we had entered a bit earlier, so now we can enjoy the big push, with a stock which potentially could be more volatile than the S&P itself, and therefore enjoy even more performance, not only because we enter at the right time, but because we enjoy that very powerful push that happens often when a market starts making all-time high. Okay, so in the meantime, I am just relogging in top as well so we can be all in sync. Okay, Mario, how are you? It's good to see you, my friend. Very good. So now when we look at the VIX, okay, so what's happening with the VIX? Well, when looking at the VIX, we can see the VIX is now trading at 17. So it's been moving lower as expected. It hit that red UFO that I pointed at yesterday, and from there it started moving lower. There are green UFOs below. So if the VIX continues going lower, so we may see a little bit of a spike to the upside. But given the fact that in the S&P we are now having a confirmed climate to the upside, probably those green UFOs on the VIX may simply represent tiny corrections, probably enjoyable in an intraday trading for shorting opportunities. But again, as long as the climate remains, it should not be that impactful for the overall market. So if I was to bring in top and we were to look at what's happening in the options, okay? So yesterday we saw that puts were just a little bit pricier than calls, where today they are exactly at the same price level from an implied volatility point of view. And if we were to move into the options volume map, so we can see how there's still a little bit of a fight where that particular expiration date provides 1.1 times more puts than calls, but everything else is 2.2 times more calls than puts, 1.9 times more calls than puts, 2.6 times more calls than puts. So again, it seems that this climate is set to begin propagating and continue to the upside. Okay, so again, this was something that we kind of anticipated yesterday, but as we see it happening, is giving us a bit more confidence to go ahead and put those directional trades on. So today I will continue kind of like from where I left yesterday when it comes to planning on directional trades to the upside. We will hopefully identify some opportunities that are good enough for us to trade, and we'll put those trades together. In parallel, I also want to look at trades that we are running at this moment in time. And here is MPC, a trade that is teasing us a little bit, because while this trade, broke our solid line below and continued to the downside, which triggered us to convert the iron condor, which was the original trade, into an iron butterfly that now would provide a totally different profit zone, which is the blue zone, the blue highlighted zone on the chart. After this bad news, right? So now the market came back into the blue zone, and now we are like, hey, we may start making some money here, but again, we were not in the profit zone yesterday when I looked at it. So the P&L on TOS was negative, like it is today. Now, this P&L does not represent the real P&L of MPC. Let me go back to TradeStation and load OptionStation Pro, because in OptionStation Pro I was logging the various parameters of the trade, and therefore we can see here much better the real P&L, because this trade has been converted from an original iron condor to then rolling the calls down and then converting the iron condor that was rolled to an iron butterfly. So when you do all of this and you add it all together, so basically we are, no, not this one, this is SKT MPC. Here we go, almost there. So we're in a position where, here we go, that's the iron butterfly we have, and we're in a position where yesterday we were still a little bit under the zero line. Okay, so this is the zero line. Yesterday we were more or less here. It was showing minus 15. Today it's showing minus 41, because of course the stock, went lower. Okay, went lower. If we go back to the TradeStation chart, you can see how the stock went lower. Actually, even a red UFO is showing up here, which is not the best news. But again, the good news is that there is a green UFO here. So if price comes to the UFO and bounces back up, this is going to take another maybe 1 day or two. And as price comes back to the blue zone in 1 to 2 days, so what we will now be able to enjoy is the fact that the accumulation of time decay will probably now bring this trade above the zero line. Okay, if price comes back a little higher, so we are going to be now somewhere around the zero line, somewhere here. It's going to be a small profit, maybe $20, $30, whatever. But then at that time, it would make sense to close the trade for a profit instead of having taken a loss if we didn't do anything. So we are just leaving this trade alone for now. Just manage it into tomorrow, into next week. We'll meet again next Wednesday. We'll for sure talk about it. But just keep in mind that, the moment price comes back to that blue zone after being outside, we are now going to be very likely into the profit area, because it's been a few more days of accumulation of time decay. Okay, and then we will be able to fix the problem that we had with the trade not behaving as expected, and getting into damage control mode is giving us that chance to fix it. Okay, which again is not always the case, but at least damage control mode does allow to reduce the risk of the trade. At least we get that. So and by the way, it's kind of funny. Well, funny is not the right word, but that stock is falling 2% while the S&P is going higher. Normally stocks follow the S&P. Of course, this is a commodity company, so something may be happening to the commodities which is driving the price down. But funnily enough, the same thing is happening to SKT, that is falling 4% today, right? And the S&P is going higher. So again, those stocks are not looking too good to give us anything significant from a profit point of view. But again, with both we worked on the original trades, which in this case was a calendar that then was converted to a vertical spread. And again, the risk of the trade here was, was basically cut down to, I believe it was $57, if I'm not mistaken, from yesterday values. Yes, 67 minus 10, that's $57. Okay, so that's what we have as of now in our accounts, and therefore I'm done with trade management. It's time now to plan for new trades and execute new trades after going through a process where we are looking for specific parameters, quality, and risk management all in place. If you guys have any question, this may be a good time for you to type it when it comes to the past trades. I would not expect too many questions, even though I'm indeed happy to listen to you carefully. Sometimes, by the way, I run fairly quick through the use of the platforms and things like that, because I understand most of you are attending the sessions regularly, and therefore you're kind of used to it, and you're practicing by yourself, as well. So, if I move quick throughout TOS, or I move quick with TradeStation and so on, so it's kind of the normal dynamic. At the same time, and also because I'm trying to make time for new trades, but at the same time, sometimes you guys may have questions. Sometimes, hey, Jose, how did you do that with the platform? So, I'm happy sometimes to have a little pause and also talk about the use of the platforms, okay? Because we are using, and we will be using, a collection of different tools in all our sessions. TradeStation, TradingView, Thinkorswim, Top, and more, right? So again, I don't want to limit the sessions when it comes to the various tools that we use. And if I can bring some support with, the use of the platforms as well, happy to do so. Just type it on the chat box and I'll be happy to address it, okay? Cool, okay, so let's go back to Top in this case. And yesterday, we started going through a process with the matrix, okay? So when it comes to planning trades for directional purposes, okay? So here's the matrix. Okay, here we go. I didn't want to make it transparent. So here's the matrix, and I want to kind of like rephrase a little bit some of the things I explained yesterday a bit quicker, so we can understand better how I am going to try to find high quality opportunities for trades that profit when the market moves up. This is going to be my first attempt today. Find good quality trades to make money when the markets rally. Why? Again, because of that new climate on the S&P and potentially having a push with a new all-time high situation. Siderman looked up math definitions and mean and median yesterday. Oh, very good. Very, very, very good. So then you understood, I guess, what I said about, I kind of oversimplified the definition, but at the same time, I guess that you felt it was fair enough from my end, and hopefully reading a little bit about it brought you a bit more awareness on why, instead of using averages, we're going to be using percentiles in some of our assessments, okay? The median being 50% percentile, okay? Anyway, so let's look at stocks, okay? And yesterday I started, working on the advanced option scans. To keep it a bit simpler today in the review, I'm just gonna go to all stock symbols. So I'm not gonna be looking at options now. I'm just gonna be looking at underlying stock symbols, and then I will add option stuff just to not to make it too complicated. And then yesterday as well, I was using $34 as a minimum price for the stock. So, the higher the price of the stock, really, the greater the advantage with options. So I'll start at 34. You can certainly start, maybe 20, 15. It's okay, but definitely like below $5, $10, trading options doesn't really make that much sense, because you need to come up with so many contracts that then you get killed on slippage, and it's not ideal. The cheaper the stock is, the more it becomes an option, isn't it? So anyway, I selected all stock symbols. I got minimum price for the stock, for the underlying asset, $34 a share. And now here I got additional filters below. I got the stock filters, options filters, scan list, DT, earnings, and stock price range. Okay, so first, from a price range point of view, I'm just going to leave it on check. This is just if you want to look at stocks that have been ranging and stuff like that, but we will not use it at this moment. Earnings, okay, for now I'm gonna uncheck it. So I'm not gonna be checking for earnings. One of the great features of top is that when you scan for stocks and options and so on, you can also filter out earnings, okay, and therefore save time in your analysis, because in the past many times we've been looking for stocks and they look good and everything is good and the UFO is good and the probability is good, and then next thing you know it's like, oh wow, earnings are happening next week, so we cannot do it, right? So in this way, we can kind of exclude or include things. We'll talk about it here. Also, I got some strength levels and Elliott wave. I'm just unchecking everything. Okay, scan list, I'll use a scan list in a minute, but for now it's unchecked. Options filters, no options filters, and stock, it's also all unchecked, okay, as I start. So if I uncheck everything and I scan, I'm gonna get a crazy amount of stocks that meet that criteria. Okay, why? Because basically there is no criteria. The only criteria is all stocks in the US that are $34 or more. So this is a good starting point, but obviously we need to be way finer than that. So where are we gonna go next step? Okay, well, one of my preference, and as you guys gain access to top, you may develop other preferences too. Okay, and then you can go back and backtest. One of the nice things of top is also that you have a training mode. Okay, so these little rewind arrows is a training mode, so you can always go back in time, okay, and basically replay the market, either one candle at a time manually, okay, like this, which by the way I'm hiding the price. So you can replay the market one candle at a time, or you can just click play and set the speed, and then it replays for you, and then you can pause, rewind, all that stuff. And this allows you to basically see what's going on, see how the UFOs form automatically, all of those things, and basically learn and practice faster and more efficiently. Okay, so you will develop your own preferences. You will probably come up with your own trading plans. At the same time, I think that one of my values here is to also bring in some experience and things that I've seen work well, and therefore are part of my plan. And one of the things that is important really with stock trading is to understand what's going on, not only to the stock itself, but also to the group or the industry, because stocks are fragile. I said that millions of times, okay? And I don't say fragile as a bad thing. I just say fragile as an objective thing, okay? Next thing you know, the S&P falls and the stocks fall. And maybe that's a good company, that's a good trend, that's a good everything, but next thing you know, it falls. Why? Because S&P futures are down, okay? So again, there are external forces that impact stocks, being one of them the group in which they are, okay? Which group they belong to. So for example, when it comes to groups, we're talking about technology, consumer goods, oil and gas, telecommunications, utilities. All of those things are groups. Inside of them there are industries, and all of these things have an impact. Okay, so one thing that we can do that helps a lot is to make sure that group is moving in the same direction as we want the stock to be. Okay, if we do that, thank you so much for that, Jeff. If we do that, now we can afford to be slightly wrong on the stock, but overall, next thing you know, the stock is going to get a kick from the group and the industry, and hopefully from the S&P too. And next thing you know, everything goes back to normal after the stock is moving against us for a bit. Okay, so again, having the group and the industry in our favor is indeed something powerful. So we're going to start filtering again. In a perfect world, you check mark everything here, right? So you make it everything is up. Okay, so the rotation is up in the last 3 days. The trend of the stock is up in the medium term, in the long term, the group and the industry too. Now, if I check mark everything, okay, what's the issue? I'm being so perfectionist and so demanding that my list of stocks is going to be nothing, okay, because it's too much of a demand. And if that's going to be the case, someone already caught the trade and the stock already started moving higher, I'm late to the party. So we need to be a bit more flexible. We have other tools to assess the trade, such as the UFOs. So as long as we have some external forces in our favor, then we can work on the stock itself, and it's good enough. So I'm going to start with very little demand, which is no demand on the stock, only demand on the group, which is the long-term trend for the group is up. That's going to be my demand. If I scan for that, okay, now I'm going to get, a relatively lengthy list of stocks, okay? That's, to be honest, is way too long. I can scan, I can add more check marks. Okay, and I'm gonna come back to this screen in a minute. Okay, and now that I made you more aware and I kind of reviewed the power of adding the group of stocks in the filtering process when looking for stocks themselves. Okay, thank you so much, Leland. So what else am I gonna do before I come back to that screen? Well, options filters, I got nothing because I'm not filtering for options. I'm filtering for stock symbols. I can also filter for options. Okay, so you got thousands of stocks with options, and every one of those stocks with options got many expiration dates and many strikes. So you got thousands of options out of thousands of stocks. So you can filter based on those options too. Okay, so maybe you're looking for an option with a very high implied volatility. You're looking for a contract with a specific parameter. You can do that too. But I'm not doing that. I'm just looking for stock symbols now. Okay, so stock symbols that belong to groups that are very strong in the long term. That's the first thing I'm done. Options filter, again, I repeat myself, I'm gonna skip it. I'm not filtering for options contracts, I'm filtering for stock symbols. Scan list, and here I'm gonna add something, okay? I'm gonna import a list, which I am happy to email you anytime, which is a list called penny increment options. This is a list which is maintained by Thinkorswim, which is obviously a very well-known broker in the US, belongs to TD Ameritrade, now belongs to Charles Schwab. And this company for years and years have been maintaining this list, which I use for years and years, which is kind of cool because all the stocks that are in that list have options that are priced in pennies, meaning that when you are looking at the bid price and the ask price of those options and you're trying to shave your entry, right? Maybe get the midpoint or maybe not, but close to the midpoint. So you can try to get to the midpoint 1 cent at a time, instead of other options contracts that may be less liquid, where you can only negotiate your prices like 5 cents at a time or 10 cents at a time, which basically guarantee a bit more slippage. Okay, right? So in other words, without even having to look into open interest, volume, without looking into liquidity parameters of those stocks, we kind of know already that list of stocks, it's providing options that are fairly liquid. Not all of them are that liquid or so much liquid, compared to other options, but they are all fairly liquid. So it's a very good starting point. And by the way, that list is stocks and ETFs as well. Even though at the moment I'm only looking at stocks, okay? I can also add ETFs if I want to. At the moment, I'm simply looking at stocks, okay? So now what happens if I scan again? Well, now my very long list now is less long. Still very long, but is now less long. Why? Because I'm basically removing all the stocks in the US that don't have options that trade in penny increments. Okay, so this is now more powerful. So now that I have a decent list of stocks, okay, which belong to a group which is strong, and I have filtered them again using that list, which allows me to trade options which are priced in penny increments. I am now going back to my stock filter list to now try to be a bit more demanding now that I got a list which is relatively long. Let's say I got only 3 stocks, so then no need to check mark anything else because I only got 3, like I did yesterday. Okay, but today we got a bit of a stronger push out there. The climate now is blue on the S&P, so I should be able to be a bit more demanding, maybe with the medium term trend for the group, and see what happens. Okay, and now notice that now I got long term and medium term, and I still got a relatively long list. Notice how everything is kind of falling together, right? Yesterday, to be honest, I was showing you this and I ended up with 3 stocks only, and I was somehow a bit frustrated because from an educational point of view, from a demonstration point of view, I could not really show you too much, if you wish. But at the same time, it was a great exercise that you saw it yesterday and you saw the difference today, because the difference between yesterday and today is what? Yesterday, the climate was red on the S&P. Today, the climate is blue. And that impacts all the groups, and therefore now I got more strength in the groups, and therefore now I got more opportunities. Okay, so this is kind of a good lesson, which is a market lesson that tells us don't be in a rush, be patient. Okay, the good opportunities imply sometimes a little bit of waiting, okay? And this is something for us to know. So what am I going to do now? Well, I'm going to be looking at intermediate term trends on the stocks now, and ideally also find intermediate trends that are up. And notice how I got a bunch of stocks, okay? And maybe I can even be a bit pickier by adding the long-term trend for those stocks. And now I ended up with, 2, 4, 6, 8, 10, 12, like 14 stocks. So I would say this is good material, okay? This is good material, okay? Now, all of this is very good if you are a stock trader, okay? Because the one thing I didn't do so far, okay, is looking into the prices of options, okay? That I haven't done it so far. The only thing I have done now, yes, Mario, thank you for that. Thank you for that. Yeah, yesterday, to be honest, it was great that you saw what you saw yesterday. And you're going to see a little bit of that today too, okay, by the way. But seeing the contrast between what you saw yesterday and today, I think is a very good visual exercise. And also, all those days when you are trading by yourself and you're at home, right, and you're there in front of your computer in your sitting at your desk, and some days you have plenty of opportunities, some days you have less, and you're like, oh, but I want to take this trade. Well, again, we cannot force quality. Okay, we can be flexible with entries. We can do certain things which I said yesterday we need to teach you when it comes to entering trades. Using different techniques apart from the UFOs in that pure application of UFO trading, if you wish. So we need to talk about that too. But also, it's important for you to understand that every day in the market is different. Just like if you were to be a fisherman, every day when you get in the boat and you start getting into the waters, every day you're going to get a different quantity of fish, okay? So we cannot force it. We need to be adaptable and respect what the market has to provide, okay? So anyway, now going back to this, up to this point, we have a fantastic list of stocks for stock traders. What am I missing though? Well, what I'm missing is filtering for cheap options, because the best way to be directional with options is to be a buyer of options. And the best way to manage your risk and increase the performance of your options trades when you buy options is to make sure they are low price, meaning they have a low implied volatility built in instead of a high implied volatility built in. Well, so far, I'm not filtering for any of that. Okay, so let's do it. Yesterday, I went into the all stock symbols. I went to the advanced option scan. And the first thing I did is to filter for top positive CIV spread. If you recall yesterday, that means that the implied volatility, the continuous implied volatility real time for calls is higher than the continuous implied volatility for puts. So there is a spread which is positive on the differential between implied volatility for calls and puts. And the only way this happens is that more people are buying calls and more people are selling puts, okay? And buying calls is bullish and selling puts is bullish. And if you do it at the same time, you do synthetics, which is bullish too. So in other words, the only way this happens is that behind the scenes, okay, something like that is building up, okay? When you see that plus 1.7 more calls and puts are being traded, that kind of thing is building up behind the scenes, which is being reflected in the implied volatility differential in those stocks. So I'm going to pick that filter, and that for sure is going to reduce the list of stocks by a lot, okay? In this case, all of them, okay? So that's why I said you're about to see a little bit of what you saw yesterday, okay? So I'm going to go back to uncheck this, okay? Because now, of course, my demand is huge, okay? I am demanding, okay, options with stocks where, it's like, the moon, the stars, the sun, everything is lining up. And of course, you should shoot for that. But the more you demand, the less stocks you will have. So notice if I unchecked the strength on the stocks, I still get a pretty good list of stocks. So basically, I'm okay to check it again, but for sure, I'm going to have to uncheck one of the two, the medium or the long term, to hopefully end up with some sort of a list. So if I do midterm only, I get Abbott. If I do long-term only, I get a few more. Okay, so this is workable, but there is another thing I haven't done yet. Okay, there is another thing I haven't done yet, which is now I'm looking for options where the implied volatility on the call is greater than the implied volatility of the put. But what if the implied volatility is very expensive? Okay, so yeah, you got more implied volatility on the call than the put, which is showing that there is a directional bias for the market to go higher. But then you're going to be buying very expensive options. I didn't filter for cheap options. So how we're going to do it? I'm going to go back to the advanced option scan. And yesterday, one choice I used yesterday was put are less than 20 percentile. There are more choices, okay? You can see there are many things here, but let's start with this one. So if I use this one, what's going to happen? And I end up with 3 stocks, okay? If I look at Abbott, is Abbott falling into this category? Abbott is not, okay? So in other words, even if I uncheck everything about stocks and I only rely on the groups, which is not a bad way to do it, by the way, okay? Because then I'm going to check auto climate anyway. So then I end up with 6 stocks, okay? So now those 6 stocks, okay? Now we need to go and check the charts, and the charts is basically now is going to be everything. But if the chart is giving us a go ahead, imagine how many odds you have built in already into these trades working well. Of course, we will always manage risk because there is no guarantee no matter how many odds you built in. But for sure, this is a good starting point, and this is running on the server side, meaning that scanning is real time and it takes no time, okay? And it's like that the whole day, okay? So let's look at GME. Okay, we're gonna start with this, okay, and then I'll come back in a minute here because there is more that we can do, okay? So let's take a look at GameStop, okay? And when looking at GameStop, you can see that while today, okay, let me edit study for the calls and the puts. So if I look at the implied volatility for calls and puts, and notice I have a smoothing factor, which is an average, okay? So this is an average of the last 3 periods. So if I uncheck that average and I click OK, like the filter suggested, okay? Well, when I run the filter a moment ago, implied volatility for the calls was slightly above the puts, and now it just went down, okay? So, that's what just happened a moment ago. In any case, the climate is not confirmed, okay? The climate is not confirmed, and therefore GameStop will not be a valid trade for us to take. So what if I look at Bristol Myers, which is the next one in the list? Well, Bristol Myers have the implied volatility of the calls is 21, the one on the put is 19, so we got more calls than puts, okay? And the climate is confirmed, and this is 1 out of 7, okay? So this is a nice setup I would like to explore. Now, here with the tool I'm using here for implied volatility of calls and puts, a second ago, I went ahead and I unchecked the smoothing factor. I prefer to have it checked, okay? Because basically I'm trying to understand overall, is the implied volatility of the calls gaining speed against the puts, or is only today? Because if it's only today, I may be jumping ahead. I may be, I may be just a bit too aggressive when it comes to confirming the direction of that stock. And this is exactly what's happening with Bristol Myers. While today, the implied volatility of the calls is greater than the puts, okay? Overall, if we were to average what happened in the last 3 days, we are still not above. We are very close. The climate is confirmed. If you take the trade, it makes a lot of sense. But in that process of looking for the highest quality we can, I would prefer to check other stocks, where as an average in the last 3 days, we are above. We are above. You missed to flag 1. Yes, correct. So what about ODP, which is the next one? Okay, so ODP, we have the same story. The calls and the puts are still, the calls as an average are still below. Again, if I undo the average, you will see how the call is above. Okay, but also the climate is unconfirmed. Okay, so, by the way, you can see how those tools end up kind of confirming each other, even though we are looking at totally different market data. Okay, and what about ABBV? Okay, well, ABBV, the climate is confirmed, but the call as an average is still slightly below, right? So again, would be so much better to have it above. It would be so much better as a confirmation. And finally, BSY, which is the last one in my list, okay, where the call is clearly above. Okay, that one, the call is clearly above, so that would be good. But the climate is not confirmed, so it would be a no-go. Okay, so again, being very picky here, and again, being picky is a good thing in trading. Okay, so now, does it mean no trade? No, not at all. Why? Because for me to understand that options are not pricey, there are more ways for me to explore. So the one technique I just showed you now, which is the most extreme, is to look at the 20 percentile. Okay, and I was looking at it on the put side because again we're looking at the calls to be higher, and therefore it doesn't really make sense to look at the calls to be. I could look at the calls to be below 20, but then I'm gonna have even less opportunities. Okay, so I looked at the puts, and that's certainly extreme enough. Okay, what is another way to look at this? Well, the other way to look at this would be to look at the CIV mean to be below 2 standard deviation. So let me select that and explain what that means. In this case, it returned nothing. Okay, so yeah, so that's what we got today. But in any case, let me go ahead and explain what that is. So if I look at the implied volatility and I plot together 3 different historic volatilities. Okay, so I'm plotting historic volatility 21 day, that's 1 month. Historic volatility 42, that's 2 months. Historic volatility 63, that's 3 months. Okay, 63 days is 3 months, 21 days is 1 month, 42 days is 2 months. So if I plot it all together, okay, you will see there are times where the red value, which is the implied volatility, is clearly above the average. Okay, there are times where it's below the average, and there are times which is more or less with the average. So above the average of historic volatilities could be seen as expensive. Below could be seen as cheap. More or less at the average could be seen as fair. So what I'm doing here with the matrix, okay, is basically looking at the implied volatility mean, which is the red line. Mean means the midpoint between calls and puts. So that's the mean. And I'm looking at this with the historic volatility of the last 45 days, which is fairly 2 months. And basically, I'm looking at options that are in that situation where the implied volatility is below a 2 standard deviation, meaning not only is cheap, it's crazy cheap, crazy below the mean. Okay, so in other words, that's another way to look at implied volatility is being very cheap, because sometimes you will not get to the 20 percentile because the stock became very, very, very volatile. Let's say a stock was very, very, very quiet and suddenly the stock is picking a lot of speed, right? So the options are never going to be that cheap as reaching 20 percentile. Why? Because the stock is just moving and moving and moving. Now, if the stock is moving and moving and moving, and that means a high historic volatility, but the implied volatility is not catching up the speed of the stock moving, certainly it still makes a lot of sense to consider options to be cheap. Okay, and therefore, I am always happy to run 2 different scans, the ones relating historic volatility to implied volatility, and the ones relating implied volatility to implied volatility. Okay, but by breaking it down into 2 pieces, the call side and the put side. So maybe I should write down on the screen what I just said, because it's a bit advanced and I'm concerned maybe I'm losing anyone. So just in case, let me explain what I just said. So to understand overpriced or underpriced options, I'm going to be looking at 2 things. Okay, I'm going to be looking at comparing CIV with CIV, continuous implied volatility with continuous implied volatility, and look at the 20 percentile. Okay, that or 80 if I'm looking for expensive. Okay, so if I'm looking for expensive, I look at 80. If I'm looking at cheap, I'm looking at 20. That would make sure options are very cheap based on the prices of options throughout the life of those options. Okay, because that's implied volatility compared to implied volatility. And then of course I'll do it for calls and puts separately, just to be very much more precise. Okay, and have an edge on the direction by looking at the top positive spread, so I know the calls are above the puts or the puts are above the calls. Okay, but what's the other method I'm going to use to understand how overpriced or underpriced options are? Well, I'm going to look at the implied volatility compared to historic volatility. Okay, but not today. Okay, I don't really care about is it above or below the historic volatility today? I don't really care about that, which is kind of like the classical way on how to look at it, where most options books would kind of talk about it, which is if continuous implied volatility is above historic, it's overpriced. If continuous implied volatility is below historic, it's underpriced. No, I'm not going to stop there. I'm going to look at how far below and how far above it is. And the how far, okay, how far is answered by 2 standard deviations. If continuous implied volatility is 2 standard deviations above historic volatility, then it's overpriced. If it's below 2 standard deviations, then it's underpriced. Okay, and that way now you are looking at extreme situations, both in cases where the stock is behaving like it's always behaved, or in cases where a new stock or a stock that was very quiet for a while now is really picking up speed, and therefore you will never get to 20 percentile on the CIV. But what happens is that the historic volatility is now, maybe historic volatility was 5%, and now historic volatility next thing you know is 40%. So now when the CIV it's maybe 20, which is 4 times 5, actually now it's very cheap because the stock is moving at a rate of 40, which is never done before, right? So in other words, we're going to be looking at both to make sure that we are always, kind of like in sync with the market, being the 20 percentile the most extreme of both methods, even though there will be times where it does not provide much, okay? So this is kind of like the summary, and hopefully this little writing helps to understand better. So anyway, so I'm a bit stuck today with the opportunities. Again, I was expecting a bit more, but it's not the case. And it seems that minus 20, less than or equal to 20, was providing a few more opportunities, okay? So now, let's continue. How are we doing with time? Time flies. So, what if any day you are stuck with not enough opportunities, okay? Like it's kind of happening to me today. Well, you can always be a bit less demanding with the groups, or switch to other methods of understanding turning points, which I showed you yesterday. I mean, you can see today if I uncheck the midterm, it doesn't change too much. If I uncheck the long term, it's about the same as well. Okay, so really what we really need is a little bit more of a push of the S&P, and probably next thing you know, we're gonna have so many more symbols on the screen. Okay, but today is what we got. So what else can you do if this method does not return enough opportunities for you? Well, you can get into Elliott wave. Okay, so if we look at Elliott wave up in the last 5 days, medium term, okay, and you scan for that, we got nothing so far with 20. What about with below 2 standard deviations? We still get nothing. So then the idea is to play with the various types of Elliott wave, medium term, short term, and ultra short term. And this may be one of those days where the market is not giving us what we need yet. Yeah, correct. So then we're gonna look at back to CIV put minus 20. And now we start having new symbols, okay? So I'll start with a long term to short term. So we got XLF, which is an ETF, okay? So we can look at XLF. So if we look at XLF, okay, what we have, okay, so we have the calls as an average above, the climate is not confirmed, okay? So yeah, so we cannot do it. If we look at medium term, we saw it before that there was nothing. If we look at short term instead of medium term, now we see Marvel. So we can look at Marvel and see what happens. And Marvel is good from a climate point of view, but is not good from the CIV spread. Okay, the calls are below the puts. Okay, so no time to do it yet. So we're gonna continue with other types, which is ultra short. We get Lulu. So let's take a look at Lulu. Lulu has calls above the puts. Lulu has a confirmed climate. So Lulu is a valid candidate with 51% as well. So Lulu is a valid candidate to plan on a trade. Okay, now before I plan a trade on Lulu, which seems to be the trade we're gonna plan today, I wanna tell you a bit more about the ultra short, Elliott wave thing. The beauty with the platform is that you can actually automatically apply Elliott wave, even if you don't know anything about Elliott wave. It's all built in. So we were looking at what was it? The ultra short. So when you load Elliott wave turning points, you can uncheck everything and only check the one you're interested in. In this case, ultra short. There are multiple parameters. One day we'll get into this. So far, I'm just gonna click OK, and notice that those ultra short are gonna be those diamonds that show up from time to time. Okay, so if I zoom in, okay, we had in the scanner, I had within the last 5 bars. If that diamond happened in the last 5 bars, let me know. So so we have it here. All those dots are actually indications. I'm not sure why I said diamonds. So all those dots are indications, okay? And therefore we are in that turning point, but unfortunately we have reached the highlighted pink area, which is basically the target for that ultra short turning point based on Elliott wave, and this has been reached already. Therefore, expecting more than this would make sense from the point of view of the climate and the calls, but you will not have Elliott wave in your favor. Okay, so in this case, it will not be as ideal. Okay, so I'm going to continue my research to see if I find something a bit more ideal, which is the dynamic. Okay, and let's see if we get something with the dynamic, and we also get Lulu. Okay, which is the one showing up here. Okay, so yeah, so unfortunately, we need, I guess, we need a bit more confirmation of the S&P moving higher. Maybe what's happening is that there is a little bit of a lagging effect of some of the key groups that are showing strength. Of course, nowadays with the pushes that we have to the downside on the market, really we only have 1, 2, 3, 4 groups that are blue. Everything else is quite undecided. Even if we look at the long-term trend, we're 1, 2, 3, 4. We're still with 5, if you wish, with this one, 5 groups. So it's not like, like other times where, you will do the same thing I just did right now, and you will have so many more symbols just because, more groups are pointing at the upside. So again, this is something for us to keep observing when you're looking to buy options. Okay, now, if you recall, when we did the trade with Lily, I didn't buy options. And to be honest, it's so many trades, I don't fully remember what was happening that day in the market. But I believe that one of the issues that we had was similar, that we exhausted all the possibilities to look for directional trades through buying options and creating a debit strategy, but all the options were too expensive, and therefore we decided no go. Yes, you're right, Jeff. Probably a couple of days, many things will have changed, okay? But basically now, I'm diving into the next scenario, which is, okay, so let's say you got no trade. Let's say that's it, it's over. And let's say you need a trade, because option number 1 is like you have no trade in your portfolio, and therefore you just wait for the right trade to appear. Option number 2 is that let's say you have multiple shorts in your portfolio already, and you need some long to hedge against the shorts, even if the S&P is supposed to make all-time high and everything else, and therefore other positions may do well in your portfolio, assuming you have other trades. Let's pretend that your portfolio is not like that. You have plenty of shorts. The climate just changed to blue on the S&P, and most of those shorts are more likely going to provide a loss instead of a winner. So you want to hedge, and maybe you don't want to close them yet because there may still be a possibility for a correction and they may profit for you. So you may want to enter a hedge and you need longs. So what else can you do, which I believe is a similar situation that what happened when we did Lily? Well, the other thing you could do is to completely reverse it. And instead of looking for cheap options, look for expensive options. And you're going to be like, what? Expensive options? What do you mean? Well, yes, you can look for expensive options. So I'm looking for puts above 80. Okay, and I'm going to go back to my original filters, based on based on stocks. In this case, of course, we have many very little. Okay, but again, I'm going to start where I was before. So scan again. We have EA. So let's take a look at EA. And you're going to be like, why are you looking at expensive options? Well, because if you recall, okay, and EA will not be valid because the climate is red. Okay, so I'm going to look at something else in a moment. But the way we did it with Lily was basically, if you recall, and for the ones of you that were not with us at that time, so what we basically did is that we were selling, we sold put spreads below. Okay, we sold put spreads below. We got paid premium, and because they were expensive, it was okay, it was decent. And then we took this premium and we turned around, and then we bought calls at a higher price, which were basically paid by the puts below. So we ended up with a free trade from a cost point of view, not from a risk, because the risk is the distance between strikes with the put spreads. Okay, so there was risk involved, but basically you ended up with a free call, meaning that you eliminated the problem of options being expensive or fairly priced instead of being cheap. Okay, so this is what I'm going to do. Okay, I'm going to be looking at options to be more on the expensive side. I didn't find any by looking at positive 80. So what's my other choice? Well, remember, my other choice is to look at CIV mean compared to historic volatility above 2 standard deviation now instead of below. It's the same story I explained before, but inverted. So I'm going to look at above, and now I got 2 more opportunities. So let's take a look. This one won't be good because while the calls are greater, the climate is confirmed, we are 13 out of 10. Okay, so that wouldn't be good, even though I got more stuff to explain, and to be honest, we would be ready to plan this trade. Why? If you notice, auto climate here has other parameters that we didn't have before. So we are 261% out of what could be 1199. So that climate has room to propagate further if you look at it from a different angle, which makes sense. So I'll talk more about that in another time, but just not to drive you crazy. So I'm just gonna go back to what I was doing, and then be a little bit less demanding. Okay, and go back to my Elliott wave and start with the long term from up to down and see what I get. So from long term I got nothing. From midterm I got nothing. From short term I got nothing. Well, maybe this is one of those days, my friends. From ultra short I got nothing, and from dynamic I got nothing. Well, unbelievable. Anyway, but this is trading, my friends. Okay, we said it often enough that sometimes sitting on your hands is the best trade you can do, and it seems this is the case. I mean, the thing here is so much filtering, all is real time, and it just takes no time. Okay, if you wanted to do this with TradesStation, every time you run the scan, you know what happens, right? You need to spend a few minutes of waiting time every time you run the scan, and here is all real time. So that's the beauty. So we're gonna be able to really do many things very quick, assuming the market gives us the opportunity, okay, which is not the case today. So bottom line, a little bit of a lesson from today. To be very efficient in options trading, we will plan trades at the speed of the light, but this will imply you mastering the matrix. So as you get accustomed to those multiple tabs and you get accustomed to what you're looking for, in this case, group rotation, then I was looking at Elliott wave. So as you get accustomed to all of this, then the speed of finding the trades will be greater, assuming the market is giving you those trades. Days like today, the market is just not giving us to us, so then there is no trade. Of course, we can look at non-directional, which I haven't done yet, and we won't have time today because we only got 7 minutes, but just to show you, so you will look at basically options that are expensive based on the mean, to do iron condors, for example, options that are expensive based on the mean. You will not care about what's going on to the stock from a group point of view, but you would care about the daily and the weekly to be in neutral zone, which I will need to explain what that is at some point. And then you would scan And now those are your high quality opportunities to do a non-directional trade. Okay, and you would just come in here. We'll do that next week. Okay, you would come in here, and here you have projections of the ranges. We got multiple lines here. You're probably guessing what that means. Okay, those multiple lines basically they represent the blue ones are historic volatilities. The red one is representing continuous implied volatility. So what's the beauty of this? Well, the beauty of this is that we're going to be setting ranges, okay, based on expiration dates in the future, in this case here and here. And, you know, in the future, you could project what would happen if the stock behaves the way it's behaving the last month, which is this. What would happen if the stock behaved the way it's been happening since 2 months ago, which is here? What would happen if the stock is behaving like 3 months ago, which is this? And what would happen if the stock is behaving based on what's built in the options? Which sometimes the red line is going to be beyond the blue line. Sometimes the red line is going to be inside. Okay, it's going to be something like that. It's going to be inside. So, so we're going to be able to define our ranges much more precisely than what we used to do with OptionStation Pro, and then look at the UFOs and then plan the trades and all of those things. Okay, but again, we will do that. You know, I guess next week. We will also, by the way, when you filter based on greater than 80, you will not get all the opportunities. So if you also filter based on above 2 standard deviations, you will get more additional opportunities that you can also check. Okay. And by the way, I didn't say it, but you can also exclude. For example, when we do Iron Condors, we often like to go at least for next week, right? So you could exclude the next 3 days. If earnings are happening in the next 3 days, exclude it. So basically, then the symbols that show in the list, you know, they are symbols valid. You know, you don't need to filter based on expiration date, which you could, because expiration date is here on the chart. Similar to TradingView, you have your expiration date right there showing on the chart, but you know, you don't really need to. Okay, so we'll be able to very quickly plan those trades. Okay, so long story short, the matrix is going to be such an important tool when identifying all those opportunities, defining what we're looking for, and just move comfortably from tab to looking for a variety of different type of strategies for us to employ. Okay, how is it going? We are almost reaching the top of the hour, so it's looking like today is going to be a day where I'm just looking at the various chats. It's looking today like it's going to be one day where I won't be able to execute any trade, unfortunately. But at the same time, all those conversations are needed. So as we get deeper and deeper into what we're going to be doing in the following sessions, you guys know where I'm coming from a rational point of view. What is it that I'm looking for? College of Organic Chemistry. I'm not sure exactly what I said when you wrote that. Sorry for that, Siderman. Christian, the market is waffling, I believe, which might affect the scans. Yeah, definitely. The beauty of the scans is that it's real time. So, you know, you go for a walk, you go for lunch, or, you know, you go for the gym and come back, click scan again, and new opportunities will appear if the market bring them to us. Again, this is real time on the server side. Okay. Thank you very much, Jeff. Again, I don't want the option sessions to become trading platform sessions, okay? But obviously, we are adding new tools, and as we are adding new tools, obviously a little bit of time needs to be spent so you understand what is it that I'm scanning, what is it that I'm looking for, so it's all well understood. Okay, so a little bit of explanations will be needed. Okay, my friends, so I believe that we may be concluding the session here for today. So what's going on the S&P? What's going on the S&P? Yeah, so the S&P doing its thing. Yeah, not many more changes. Yeah, I mean, like the candlestick represents pretty quiet day, and yeah, so not too many things. Implied volatility stays the same. Behind the scenes on the options volume map, we can see calls are gaining the battle. Lots of calls at 435. So if the market was to break 435, you know, probably uh, lots of closing of profits there, and you'll see the market hesitate, and from there probably a takeoff. But if it doesn't go up for 35, I believe not much will happen in the market. Okay, for 34.51 at the moment. Anyway, my friends, I guess we're gonna conclude the session here. So kind of like sharing one last thought before we go. If you think about, for the ones of you that join us from starting from March 1st, earlier in the year, when we started running 2 sessions a year. So what I did is taking our option sessions to the next level, where we used to do 1 session a week, then we did 2. We added more strategies, we added more possibilities, we added a lot of steps and tweaks when it comes to trade management, which is something I never covered before because it was not possible when running 1 session a week only. And now what is it that I'm doing? Well, now I am adding more precision on the planning side, on the planning portion of our trades, which is the before, right? So from March until now, I've been working a lot on the during. What do we do during the life of the trades? And these, my friends, will not change too much because what we were doing is quite powerful already. But when it comes to the before, there are certain things that we can do to add more power to those trades, which we haven't done it yet because we didn't have the tools. But now we have tops. So we're going to add more to it. At first, expect, and please bear with me and work with me on that. At first, expect a mix between trading and lecture time in some of the sessions like today and yesterday, because I need to explain what I do. If you were with me yesterday, I talked about the importance of understanding why we do what we do, because it goes hand in hand with your confidence. If you don't understand why we do what we do, if you don't understand why you trade the way you trade, you cannot be confident, and then you'll be limited on your performance, and you'll be limited on how many contracts you use, etc., etc. So I need to work on a little bit of lecture time, so you don't do what I do just because I said, but you understand why I do it. So then you understand why you do it too. So expect a mix between lecture time and executions to move into less lecture time and more executions soon in the future, and also have from time to time sessions over the weekend to talk about the lecture time, so we spend less time with lecture on during the weekdays, so that way we can concentrate on more execution and be more efficient in the markets. Okay, especially now that we have the tools. We will also create a collection of videos where all the lecture times and all the things that we are discussing together in the sessions live, that future members of our community will miss because they're not with us today, right? They will join the community in the future. So we will create a collection of videos. We'll create those sessions over the weekend, so everybody get the support they need. But for us, being first of the the pioneers, utilizing top, we will run the sessions the way I just explained, which is going to be a little bit of a mix of lecture time with execution, and from there move into more execution into the future, as we are all understanding why is it that we are doing and why is it that we do it the way we do it. Okay. You guys would like to share any thoughts before we go? Any message for me on the chat box? Anything to say? Any of your ideas are of course super welcome. Maybe you have some idea on how you would like us to run the sessions. Maybe you're like, Jose, why don't you do this at the beginning? Why don't you do that at the end? Why you don't do this and you do that instead? I would certainly like to hear your feedback and ideas if you have any, and certainly happy to incorporate any of it in the sessions, guys. Okay, so feel free to type in the chat box. I'll just give you 1 minute or two so I get your feedback, and then we go. And if there is no feedback or if there is no ideas, just a quick all good, Jose, or anything you want to say, that would be good enough. But at least I know that if there is no feedback, it's just because there is no feedback. Thank you so much, Sarah. Yes, indeed. I mean, I'm very committed, guys, to take this to the next level. You guys have been putting a lot of work as well, mastering options, practicing, and I cannot do less. I need to be at your level, guys. And of course, you know the mindset, the mindset, in this case, my mindset, the mindset of our company, Tradictive as well. You know, there are certain things computers do better than human. Processing data is one of them. So to me, while it's a great exercise to do drawing manually on a chart and look at the candles and all of those things manually, it's certainly nice, especially in an early stage of education, so you understand what you're doing. The moment you know what you want, let the computer bring it to you. I think it's the way to do it. So we've put a lot of effort into tools to give us an edge, to save us time, to be more efficient, to be more profitable, and everything else. So I appreciate your comments, Siderman. Thank you, Mario. Thank you so much. Oh, you had a crash on the computer, Clive. Sorry to hear that. Looking forward to that, Christian. Thank you for that as well. Thank you for that, Leland. Ready to learn tops. Tutorials will be available, Joe. Now, bear with me because I am launching tops, to be honest, sooner than what I should somehow. Maka is partially guilty of it. Okay, Maka, I'm saying that with a smile on my face. I mean, we keep each other accountable somehow. I keep you accountable in your trading, and you keep me accountable too, which you push me, and I appreciate that. So I'm a bit perfectionist, and in a perfect world, I would prefer to have all user guides, all everything available, and then launch top. At the same time, we are still working on developing certain materials that won't be available the day we launch top, but I prefer to launch it so you guys can start using it, and I will be around to answer all questions. So probably it's a more balanced situation for you to enjoy that. As you know, guys, we are a fairly small community. Okay, what we do is super powerful, and to me, the world should know about us. And you may feel the same, but we are a fairly small community, so I guess that we are accessible, we are reachable. All of you got my email, and therefore, as you start using tops, I'll be there for you guys. Okay, so no worries about that. But Joe, we will be creating all sorts of tutorials and everything else. Okay, I think this will be competition for Tom Sosnoff. Well, I wish, Siderman. I have great respect for Tom, and he built TOS. I was very successful with it, and then he built Tastywork, which is a great platform. It doesn't have some of the tools that we have, but it's a great platform for execution. So what may happen one day is that we connect up to Tastyworks, and you can execute your trades with Tom through tops. Okay, so why not? Okay, but that will be a step later. Clive, top looks great, waiting to be available. Thank you for that. Cider money will be fun to be a pioneer. Yeah, I'm sure that let's say 1 year, 2 years down the road, we'll look back in time and we'll be like, you guys remember? So yeah, it'll be a good experience. Thank you so much, guys, for such positive feedbacks and being so supportive to our initiatives. Just know we are committed, guys, to your success. So keep bringing in ideas, suggestions. Share the word out there with the world, and count on us, guys, to be there for you, because again, as I said, we are committed and so appreciative of you guys being there. You guys take care. I will see you next week. Bye bye. Take care, my friends.